Now, 2010 has been described as a stock picker's year for the Nairobi Stock Exchange. Analysts seem pretty bullish about investor sentiment as well as a slowly rebounding economy. Do you share the same sentiments?
Absolutely. It's been a very good beginning to the year. Market activity is very bullish. All the indicators are trending upwards. So the market capitalization, the index, the daily turnover volumes, all counters are broadly higher than the beginning of the year, which for us is a good sign. And we hope that this momentum will be maintained going forward.
Now, still looking at the investor sentiment, the political climate is one that is bound to affect the performance of the NSE. There's a referendum that is expected at around May 2010. Do you think this will have any impact on the investor interest that we're currently seeing?
I think the investors are taking the view that the politics will be sorted out. So the political influence is factored into the prices, as you see. What they're anticipating is resolution of the potential issues that could arise.
Now, the NSE is up about 8% just a few weeks into the new year, largely driven by foreign investors on the NSE. How sustainable is this rally?
I think it is. International investors will be comparing our market to other emerging markets. And if you look at markets globally, there was a very strong recovery in other markets. And in a sense, we are lagging that recovery. So our market offers global investors good value, and they are coming in to position themselves to ride the market upwards. And that has the effect also of stimulating investor interest domestically as well.
Yet another strategy for the stock exchanges within the region is the regionalization of the East African stock exchanges. Last year we saw some companies such as Equity Bank, Kenya Commercial Bank, Stanbic Bank, Crosslist in Uganda and Rwanda as well. How much does this impact the regionalization, and what is the progress so far?
It does. I mean, the companies that have cross-listed are growing in number. It's a good development. The expectation is that as the move towards closer cooperation between the partner states gains momentum, we in the capital markets will also forge ahead with our plans to integrate our markets. But as you'll appreciate, before we can begin to engage the other exchanges, we need to make certain changes domestically. One of the key changes that we need to make is we need to demutualize so that we are then able to engage these other exchanges with a view to integrating our markets.
Now, you've mentioned demutualization. The demutualization bill was to be passed in Parliament in November, but that did not happen. Parliament reconvenes in March. Do you see demutualization actually happening within 2010?
Well, my expectation is that it will happen this year. I hope in the first half of this year. The draft bill has been presented to the minister, and it is now up to the minister to shepherd it through the National Assembly. But the expectation is that it will be on the order of business of Parliament once Parliament reconvenes.
Now, towards the end of 2009, the bond markets became a darling for investors. What's your outlook for the bond markets in 2010?
The automation of the bonds has had a very good effect in stimulating that market and making it more vibrant. We've seen turnovers increase dramatically since we automated. And as you rightly say, last year we saw the infrastructure bonds come to market. There were several corporate bond issues. So I think the viability of our bond markets has been demonstrated. It's a cheaper way of raising capital for corporates. I fully expect that more and more companies will tap this as a source of capital. And so in a sense, it's the best of both worlds. We will have a vibrant bond market as well as an equity market that is resurgent.
Now, there has been a lot of effort put into deepening the capital markets within the East African region, and one question that comes to mind is collective investments, which is downplayed within this particular market, and comparing that to the global markets where investors have learned to spread their risks. across the different investment vehicles. What can be done to influence or encourage investors in these markets to put their money in unit trusts or other collective investment vehicles?
I think it's very important that we develop a culture of pooling resources for investment. People in this region have a deep heritage of coming together for social reasons, for economic reasons. And for investment, we can then build on that culture and stimulate the development of collective investment vehicles. The advantages are numerous, and I think they are not as well understood as they could be. So investor education is one key aspect of promoting the development of collective investment vehicles. They have the advantages of being diversified, of having access to professional management, of liberating the investor, so to speak, from the administrative burden of overseeing their own portfolio. But costs remain an issue. We need to make the fees attractive, fees as low as possible, which I suppose also depends on having a critical mass in your vehicle. So the providers of these unit trust and mutual funds need to do a lot more in terms of educating the investing public on their particular offerings and the opportunity that presents.